GM, welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jay Bird, and I believe that on-chain contests are going to change the world. That's why I'm carving a path for doers to confidently build and invest in Web3. Welcome back to another episode, everybody. Today, we have with us David Phelps, the co-founder of Jokerace, on the show to talk all about what they are building and what are on-chain contests. And is David the anti-token guy? He's been labeled the anti-token guy on Twitter recently because he believes in a post-token future. What does that mean? What does that look like? David is also the co-founder of EcoDAO. He also has an awesome Substack where he writes all about Web3. He's an amazing Twitter personality. He's a bit of a shit poster. He's always putting out controversial opinions. But today is really all about understanding the problems with on-chain governance. And we've created these problems because we have connected our financial token to our on-chain governments, which basically means that in most communities, whoever has the most money has the most voting power because you have the most tokens. Now, some communities have gone in the direction of quadratic voting, which helps the problem a little bit, but not fully, and we're going to talk about that. So David is trying to solve that. He's trying to solve that, and he's also trying to solve a bigger problem of, okay, so if we can get governance and voting, or what he refers to as on-chain contests, and he'll explain what that means, if we can bring that on-chain right now, that's great for all of the communities that have an on-chain presence. But what about the communities that don't? What about the communities that are big on Twitter or big on Facebook or big somewhere else that's not on-chain, it's just online, they haven't made that migration? Well, they need a simple way to set up a contest. I put contest in air quotes, a simple way that they can get their community to engage in a vote where the first action they take is not necessarily on-chain. There's something else at play there. So we're going to break this all down in today's show. This is an episode that I think everybody needs to listen to because this comes back to the core principles of Web3, which is that we need to create a meaningful way and a meaningful system that enables users more control. Because in Web 2, users don't have enough control. We are the product. But in Web 3, we put control back in the user's hands. But the first way we've done that is we ended up just so far, we put control in the rich users' hands. Well, we need to put control in everyone's hands. And Jokerace is a platform that does that. Everybody, you're going to enjoy this show. We're just going to take a quick second to hear from our sponsors, and then we'll get going with David from Jokerace. Modern newsletters are built on Paragraph. That's right. Paragraph is a brand new newsletter platform that combines the best parts of Web 2 and Web 3 to supercharge newsletters for both writers and readers. Build a community, not just an audience. Paragraph uses blockchain tech to allow readers to collect and own the words that matter to them. This takes reading a newsletter to the next level. With Paragraph, readers can mint, collect, and show off quotes from their favorite newsletters. This opens new possibilities like creators sharing revenue with fans. I also love their new feature, Paragraph AI. This integrates GPT-4 natively in Paragraph to create, edit, and improve your writing effortlessly with one click. And guess what? We at Web3 Academy are on board and have already moved our content over to Paragraph. We believe this is the future of newsletters because of the profound engagement it creates between creators and fans. So, whether you're a creator, writer, or an avid reader, it's time to check out Paragraph and capitalize on the opportunity of being early. David, what's going on, my man? Welcome to Web3 Academy.
Thank you very much for having me. It's a pleasure to be here.
All right, recently on Twitter, you said humans don't require tokens to make decisions together. Is that possible? I don't know.
In the history of humans, there was actually a point in history where people got together and made decisions about things without voting with tokens. And it's like, in today's era, it's very hard to believe that we ever lived in, such a primitive time like that. But it's true. It's true.
So, like, what are you saying, or what do you believe that is leading you to be, you've been labeled on Twitter a little bit recently for being like the anti-token guy. Is that fair? Why are you being labeled as the anti-token guy? I don't necessarily think you're the anti-token guy. I think you just have a different view on the way tokens should be used for governance or for voting. But tell us.
I have a friend, I don't know if I should say who it is, but a friend who's an amazing founder. And what my friend said to me is, every good founder, your job as a founder is to become a meme. I think this is just such a brilliant idea that, everyone can just encapsulate you. So I'm not actually anti-token, but, it's very boring for me not to be anti-token, right? It's way more interesting and way more memeable if I'm anti-token. So we'll run with the anti-token label, even though I think there are very good use cases for tokens and we do need to have them. And even though I'm building a product that depends on tokens as awards, right? And so tokens are pretty essential to what I'm building myself. The anti-token thing, I think, very much comes from specifically tokens and governance and that use case, and wondering, within decision making, really, do we want to have this system that, incentivizes plutocracy, or just is plutocracy, in which people who buy the most of something have the most power? And is that actually the best way to make decisions? And it's funny that even is a question.
So let's reframe it then. You love to be the anti-token. I love that view from a founder.
Let's meme me here for
like lean into the anti-token meme for just basically getting a lot more attention.
Reduce all the complexity of my thought to something that is just like, sensational.
Right. But you're really, like, your view is more, and like the title of this episode is all about post-token, right?
And post-token.
Okay. I know you wrote a great thread recently when you came back from ECC, and you talked about how we're stepping into this post-token era, and you gave some examples of Optimism and Aave and some others, that Boys Club, that are leaning towards governance and voting without tokens. So, and obviously you just launched V3 of Jokerace, which we're going to talk about later in this episode. But before we talk about Jokerace, give us the history lesson quickly on what went wrong with tokens. Why do we not want to use tokens for governance? You mentioned plutocracy. And what are the sort of the pillars of the post-token world?
Part of the reason I think that tokens took on the place they did was because DAOs and other tokenized communities, I'm going to do the generous read here. The generous read is right. These were set up to basically imitate corporations. A less generous read would be that these were set up for VCs to get really rich. But let's run with the charitable read that people really had good intentions here. And so, as in a traditional company, the people who own more shares of the company have more power. And, it makes sense because the more that they own of it, the more dividends that they should get, right, from it. And so they have more financially at stake. They're literally putting up a financial stake in order to get financial rewards, in theory. In practice, companies actually do not work that way. The way that companies work is that they have preferred shares and common shares of stock. And normally when you are getting stock, you're not getting governance power anywhere close to, what others do. And so the governance piece is actually already decoupled from the financial piece, right? Within corporations as well. And so DAOs, these communities took a big step backwards and said, no, let's put those back together. Let's put the financial and governance piece back together. And nobody questioned it. This was just taken, including me, right? I also, big proponent of DAOs 2021, 2022, did not question this. And part of the reason I didn't question it was I assumed it was just a limitation of the technology. I was just thinking, this is, tokens are, the fundamental building block of crypto. And so if you're going to build communities, you have to build it off of this kind of data wrapper, which is a token. And it turns out that's actually totally not true. There are all sorts of ways you can pass data, use data, store data in blockchains that are not tokens, and it can be the basis for community building as well. And so I think big argument would just be, plutocracy, right? You don't want people being able to just buy a bunch of power in order to do whatever they want. But more practically speaking, I think if you want to just nail an issue that will always happen, it's that a token represents a share of a treasury. So if a DAO is worth $1 million and there's 1 million tokens, then each one of those tokens is worth $1, right? And what will happen at some point is token prices will go up and down based on factors and who's selling and market volatility, etc. And at some point or another, the token price will fall below the amount it represents in the treasury. And when that happens, it creates an arbitrage opportunity, right? Where now you have a token that's selling for 80 cents that's worth $1. And so what's going to happen? The richest people will come in, they will seize that token, they will take it over so that they now can take and pay themselves out $1 of the treasury, right? And they will make 20 cents on that. And so this is happening with Nouns right now. This has happened, with Aragon in the past. It happens almost inevitably to every single DAO because you've created this arbitrage incentive, right? For people to come along, take the tokens, and then effectively have your worst players be the people who have taken it over. And then from there, we can also think about, other incentives around tokens where there's like airdrop issues and who receives it. I personally think a lot of thought and time is spent on having fair distribution of tokens. And that makes sense. Sure, don't put that in the hands of airdrop farmers, put that in the hands of meaningful contributors. But in the end, it won't matter if rich people are going to be able to just buy out that token over time. Because initially you might get in the hands of good people, but eventually it's just going to be the whales who own it, and they're the ones governing everything. And unless you're building something that is strictly based on the financial profit going to major, financial holders, it's really, really hard to make the case that you want plutocracy. That is actually the best system for you to make decisions.
Yeah, well, and it makes sense that we've ended up in this position because, as you said, so many projects basically did not pay attention to this and said, okay, let's just focus on how we can get our token out to our community, but let's not think about the governance side of it. Let's just allow token holders to govern. And we've pretty quickly realized that, oh, wait a second, there's a mismatch here because the people that want to purchase the tokens all have financial incentive. That's great because that's what we're building on the financial side. Tokens serve an incredible purpose, which is why you're not the anti-token guy. You're just saying tokens aren't the greatest for governance in their current use. Am I correct?
Yeah. And if you want a more cynical read on the situation, you say that you have $1 million of the treasury, right? And let's say you have US dollars in your treasury. Now you print 1 million tokens that you stand for it. Well, effectively now there's actually $2 million of value that's out there because there's the $1 million of the token and there's the $1 million in the treasury. And you've created all this value that you now can sell, at which point the token price will then pump as, you start to release it, hopefully if you're careful about only releasing, let's say 1% of it. And then you effectively are now getting greater value for what the treasury is worth off of this thing. And so it's a really effective mechanism, if we want to be a little bit more cynical for people just to make a quick buck.
How do we build a better system? What is your recommendation for building a better system?
Right. The fun thing is it depends on the needs of your community. It depends how big is your community, who runs your community, what is the goals of your community? All of these things are really going to change things. Even if you have a token, there are ways of doing governance with a token that are, I think, much more interesting than one token, one vote. So the common one that was being held up for 2021, 2022 is quadratic voting, which is effectively you just take the square root of the number of tokens someone holds, and that's their voting power. And what that means is that you get diminishing returns as you have more and more tokens. So the whales, right, are going to not have 100 times as much power as the minnows. They're only going to have 10 times as much power, right? Because you take the square root of the 100. That's effectively the idea. And I just find that it's not my favorite solution. I think it's still just it's keeping the issue, but just mitigating it, but it's not solving it. I think if you want to play with tokens in interesting ways, what you could think about is creating incentives for the token through governance. So this is getting ahead of myself in what we can do, but if you want to allow less people to participate in a contest or in governance and say, it's not one token, one vote, it's how many tokens you have times the number of days that you've held that token, right? Now what happens? Well, the people who've held the token all along from the very beginning have way more power, right, in the system. And so that's really nice because you have your OGs who've actually been there from the start having more power. Second, any whale who wants to come in and try to do that arbitrage trade that I talked about where they seize a bunch of tokens in order to distribute the treasury can't do that because they would, even if they take a ton of tokens, if they haven't held onto it for years, they're not going to be able to have the power to rug the treasury, right? And so it provides a huge, a protection there. And third of all, it actually incentivizes people to buy and hold tokens. It's telling you, look, it's not just about buying the token, it's about holding it that actually matters, which is creating a better incentive for people who really care about token models and for actually increasing the price of tokens. Even if your mind is totally lost in the whole point of governance is to increase token value, there are better incentives that you can create to do this by moving away from a one token, one vote system, right? So that would be like one example that I'm interested in, which is like you can actually improve, I think, tokenomics by moving away and doing something like, token times duration. But there's all sorts of other things you can do too. Like you can think, if I'm a DeFi protocol, like maybe I want to give power to my voters based on liquidity they've provided. And then the more liquidity they provided or liquidity they provided times duration they provided it. So you have the same kind of, mechanism I described before. And now you're consistently giving power to the people who are providing most liquidity. Because if you go back and you remember the other issue with tokens is that you can distribute it once really fairly, but then over time, right, it's going to change. It's just going to get eaten up by the whales. What's nice with the kind of system I'm talking about is not just that you moved away from tokens, it's that you consistently update according to who your most valuable people are at any given time. So the governance, right, decision-making, et cetera, is all based on who currently has provided the most liquidity or who has provided the most liquidity for the longest time, right? Those kinds of systems start to become really interesting. You can also do things like recurring contests based on like people who submitted in the past and won, or they, now they get to participate and vote. And so you create this like expanding pool of like a core council of meaningful people in your community where the people who have gotten votes are now able to give votes, right, as well. And so I think like those are kind of the systems that we're thinking a lot about in use cases. We'll get to what I actually built, but it's totally agnostic.
What I love about it is we all got really excited about DAOs. We were in the DAO summer, to use that term, but yeah, everything should be a DAO and we should go in that direction. And it didn't work. And a lot of DAOs failed. And that's okay. That's how you learn, right? Like it doesn't mean that DAOs can't succeed. But the initial belief, which made a lot of sense, was that communities should have more control. And we should be able to involve our communities in our decision-making. And I don't think anybody on the planet disagrees with that. That is a simple statement that everybody can get behind. Now, the mechanics of that were, okay, the only way we knew how to do it was to do it through tokens. And those tokens had a financial value, and you've shown that that doesn't work. So we need to decouple those.
Yeah.
You look like you want to jump in and say something.
I was going to say the only way you could do it was through token voting. And so I just, went on a whole rampage against the token part of that. But I would also want to single out voting is not necessarily the only way that people can have voice as well in communities. Like actually submitting things to vote on is often a way that, you could have power too. And so that was, again, going back to my own origins with what we built, like thinking, what's a system where you're letting people also contribute proposals for other people to vote on, right?
Without having to buy their way in, basically.
Without having to buy their way in. And so I've said this before, it's like in America, we live in this system with 300 million people where the only form of expression that you have in participating in politics is your vote. And that makes sense because with 300 million people, not everybody can be running for president, contributing, proposing something for everyone else to vote on. At that scale, you can't do it. But when you have, 10 people or 100 people, like letting them actually submit the proposals for everyone else to vote on is giving them voice in a way that you can't do in these giant size so-called democracies, right? So I think we were imitating corporate governance in some ways really badly. I think we're also imitating like political governance really badly and just assuming that voting was the only way that you could have say. And so the token voting is problematic in both parts of that phrase. Problematic, I think, in the token part, but I think it's also problematic in the voting part, which is to say voting is not an interesting expression of your voice. Like you actually speaking and saying something and contributing something is an interesting expression.
Yeah, you engaging in some way, you showing activity towards whatever that community is doing. And there's many ways that you can engage and show activity. And there's off-chain ways and there's on-chain ways. I think that sort of leads us into, let's lead into Jokerace here, because it is a big task to say, okay, we should not use tokens for governance, and there's a better way to do this. And Jokerace, which actually I got to ask first, where does the name Jokerace come from?
Yeah, so Jokerace, I started this thing called JokeDAO, was the initial name, in early 2022, and started throwing this thing called the Jokerace, actually using the Mirror Right Race tool at that point. And the idea of the Jokerace at that point, or what I called the Jokerace, was that it was a weekly competition for terrible jokes. Actually, it's still going, and it's still live, and it's, I think, now been about 80 weeks, and people still play this every week, which is amazing. I do not, but other people do. And so the idea was you contribute a terrible joke. And so everyone has to submit a terrible joke. And then if you have a joke token, you're using tokens, right? You get to vote on your favorite jokes. Now the trick was if you won if you voted on the winner, you would get more joke tokens to use the following week. Now, you can imagine the dynamic of this game. If you win, if people all start putting on first place, they're going to see that everyone else is putting on first place. They're going to go on that one too because they know it's the winner. So what we did is we made sure only second place wins. First place never wins. It's only second place. So the idea is if you give too many votes, you use your tokens too much towards one idea, it's going to go too high and you're going to lose. And so you have to think about this whole investment strategy. Like, do I do a 50-50 to ensure that I win, but I'm only winning with 50% of my votes? Or do I try to put 100% towards a different option where I'm going to get maximum return, but there's much more. And so the reason that I started this whole thing was because I had this theory that DAOs were really good at acquisition and really bad at retention. And the idea was that, with tokens, anyone could buy in. And so you could airdrop people, you could get them into your community more easily than ever. But then there was nothing to do inside the community. You couldn't contribute. You had no say. You had no games to play. You had no social connections and you had no collaboration. And so the idea was what if we created this mechanism that would incentivize collusion, where if you really wanted to win this game every week, you would have to form a team with other people and combine your votes together in order for it to pass. And to say, yeah, in traditional democracy, we've always considered collusion to be this terrible thing. But actually in a small group, the ability for people to come together, discuss with each other, negotiate, compromise, realize, together what they want is not only a good thing in of itself for governance, it also is what builds lasting social relationships because it creates teams. And so what if we can gamify this governance process to actually create teams? And the theory was, will this start running its own? Will people form teams? And in fact, it happened. That we had a bunch of people all form different teams that were competing against each other. It was all organic. And I thought, okay, this is interesting. If you can set up the proper framework for things, people will create their own sub-communities through that. And maybe that's a more effective way for DAOs to run. And so it really came out of this test using bad jokes of how can we create more meaningful communities by letting people compete around something totally petty every single week. And so from there, it became Jokerace. And then people just started, we created a platform for it so that anyone could run their own contests like this as well with submissions and voting, which was always the idea. And then everyone just started calling them joke races. I wasn't calling them that, but they were like, oh yeah, I'm going to, create a joke race, etc. And I was like, oh, this is great. Yeah, I'll just call it joke races.
So your branding was just done organically for you.
Yeah, it's done. And I mean, there is a beauty to all of this that, everything we're talking about, governance has absolutely been a joke. It's been 100% a joke. And so being able to acknowledge that in some ways and being able to have fun with that, I think is really important for us as a brand too. We are not trying to take ourselves too seriously with any of this or say that any of this is the right canonical way to do it. This should be fun and it should be hilarious. And there will be corruption if you want to call it that, but other people will call that compromise and negotiation. So pick your side and that the joke is on you.
Pun intended. Okay. So you just launched V3 of Jokerace, which is slightly different. It takes off a lot of the early features of Jokerace. Tell us about V3 and maybe you can give us some examples of how people would use this in their communities.
So the way a contest works, when you create a contest on our site, is you put a prompt out. People submit responses to the prompt. People vote in their favorite responses. And then if you want, you can add a rewards pool and the winners earn rewards from that. And so you can imagine you can use that however you want because you can decide who submits and who votes, right? So if you want to do a hackathon through us, you let everybody submit and then maybe just a core jury votes, right? If you want to do very traditional governance, you would flip that. You as a core team would put the proposals to your community and then you'd let all of them vote on it, right? So now you have a small team that's submitting, a bigger team that's voting, right? If you want to do stuff like what features do you want us to build? Maybe the same people submit and vote. Or maybe you want something where a totally different community submits and then you vote, right? And so you can customize this however you want. And that was really important to us. Let you customize who gets to submit, who votes within that. And so what's great with the V3 is we've now enabled maximum customization by just using allow lists. So you create an allow list for who gets to submit if you want, or you can open that up to anybody. And then you create an allow list for who votes and how much voting power they have. I'll give an example of a joke race that was run recently. So Li-Fi, which is a liquidity aggregator, really great company, went to their community and said, what features do you want us to build, right? And they put up an awards pool of $400 where each of the 4 winners got 25% of the rewards pool. So in other words, they each got $100. So for $400, they put up and they said, what features do you want us to build? They got 30 or 40 people from their community running these really thoughtful submissions, being this is what we want, these are the features we need. Then they got them all to vote on it. So then they got a full prioritization of like, not just what the top feature is, right? Or the top 4, but all of them. Like,
and who voted? Was it just the people that submitted, or did they open it up beyond that?
I think they opened up to their community. So I think it was anyone who was allowed listed from their Discord, and they had like some sort of bot mechanism to prevent bots on their Discord. I think that's who they used. And I think I might be getting it wrong, but I think it was the same people submitted and voted for that one. And so then they had them, all prioritize it. So now they have like this incredible data set, right, from their power users of like what they prioritize. Here's where it gets fun, right? Then you have people who go to social media because they want to win votes. They want to win this to get $100. So they're sharing this and they're talking about Li-Fi and why their feature is great, right? Like on social media, right? And so they're getting this like organic distribution, right, as well from that. Then, because this is fully on-chain, and so you can run these contests in any EVM chain you want, they're getting full on-chain data so they can track, hey, who participated in this? How many votes did they get? The votes are attestations, right? That they provided something meaningful. They're a meaningful contributor to the community. Who tends to vote on the same things? Like, who has aligned interests? Who voted on something that maybe, one day is like a really major feature that is a game changer for Li-Fi? Like, all of that is things that they can now track with their power users. So at later points, maybe they want to give more governance power to those people. Maybe they want to do an airdrop, right? Like, whatever they want to do, like, they now have that data too, right? And then the final thing, and they didn't take advantage of this one, but I think this is where it gets really interesting, is like, you could also set some sort of like incentives around how to get allow listed to participate. So you could be like, you have to have provided XYZ liquidity for us, or you have to have executed XYZ swaps with us, right? And so now people have to like complete an action in order to participate to win rewards, and they're incentivized to do that too. And you can even do that with the voting power as well, right? You can say, we're going to give more voting power to people, like we talked about this before, the more liquidity you provided, the longer you've held the token, blah, blah, blah. And so you can start to create these like really interesting incentives around both who gets to participate and how much voting power they have. And those are like $400, right? You're giving incentive for people to think about it, to prioritize their data, to like complete actions to be allow listed, to complete actions to get voting power, to share their on-chain reputation, right? It's like, and to market it on social media. That's like, I think, a really fun use case to think about.
It's huge that it not only gives them a chance to participate. I find it very interesting that you use the word contest.
Yeah.
Like, when I first started learning about Jokerace, I was like, I kept seeing you guys use the word contest, and it's kind of a leap, because when I think about a contest, I think about like sweepstakes and giveaways.
Right.
But you're more focused on governance and community engagement.
What's the difference?
So it's interesting that you're using the mechanics of a contest in order to create retention and create engagement, because this is what I'm guessing, that if you have a reward, that people are more likely to participate. Is that the reason you're framing it around contests?
And it's more fun, right? I think like you're focused on the financial incentive piece, which is by far the short-term incentive. But like, long-term, like you think about U.S. elections and like how U.S. elections have run, they become totally gamified by the American populace, right? But like all turned it into a social status game in some ways about like who can bet on who's going to get it first. Not even financial, but just like who can align themselves with who can like, come together to form coalitions. It's become this very grassroots, almost DAO-like, activity of people forming campaigns around candidates, right? Mm-hmm. Which it was like in the 1700s too, like, things cycle. And so, I think it's, when we're thinking about like, why are we using the word contest, is because it really emphasizes the social piece of it and the financial piece and maybe the reputational piece as well. But practically speaking, there is no difference between governance and contests. Those are the same word.
Okay.
Think about it. Like any sort of governance you do is a contest, right? What is a U.S. election? Is it governance or is it a contest? It's the exact same mechanism. People put together proposals and then they vote on them.
And to have a contest doesn't mean there needs to be financial. No, it really makes me think about like high school students council, right? Of,
yearbooks.
The most popular person wins. And it's really, everyone always joked that, students council was a popularity contest, right? That was governance at that level.
Yeah, exactly. And so, it's definitely, we have a brand called Jokerace that uses a thing called contests. Like we're trying to make this fun here. We're trying to, make sure everyone does not fall asleep again, with this boring iterative process of governance. But look, if you want to be boring with us, you are welcome to be boring with us. Like we will let you be boring and we will encourage and incentivize your boringness all you want. That's totally doable. But I personally think that boringness is a very small subset of the kind of governance we're going to be seeing in the future.
I love that perspective. Let's have fun. We need to have fun. It's so important. Okay, so you talked about how Jokerace allows you to incentivize users to submit proposals, and then they want to spread that, and you get more engagement in your governance, which I think is a great thing. I think another big part of what you guys are building in Jokerace is that this kind of goes back to this like anti-token view, is that you don't need tokens anymore. Explain to us in what ways could you use Jokerace where you wouldn't be using tokens and you'd still be having a great vote and great governance.
The way it works on a technical level, I'm going to get technical for like a second. It's literally a spreadsheet. Like literally what you can do is you just take column A as your addresses and column B is the number of votes that each of those addresses gets. And you upload that, and that is it from your side. What we do is we turn that into what's called a Merkle tree inside the smart contract, which is the contest, and then check it against those addresses. So the bigger point here is like everyone just assumed tokens were the only way to vote. And we said, no, actually they're on a smart contract level. You can do this 100% on-chain voting without any tokens being involved. So I ran through some cases before of like some of the ways that you could set up voting power if you wanted to, right? You could set it up based on liquidity provided or the number of swaps you performed, the durational liquidity provided, right? How long you've held a token, etc. Two things that I would note here. One is that the majority, I think, of communities in the Ethereum ecosystem still have their token on Ethereum L1. And so that's true of like DeFi projects. It's also true of NFT projects, right? And so as much as I'm being branded as the anti-token person, I would actually say like what we built is 1,000 times better for token voting indirectly, because all you would do is you would just take the holders on the L1 on Ethereum mainnet, make that your allow list, and then now you can run your full governance on whatever L2 EVM chain you want. So now NFT communities, DeFi communities, they can do all of what they were doing before, but they can do it on Polygon or Optimism or Arbitrum or Scroll or Base or Zora, or Mantle, like whoever they want, right? They have full optionality there, Celo, etc. And so if you do want to do one token, one vote, which is, especially for stuff like NFT community is pretty meaningful, you can now do it wherever you want. The other thing that you can think about is like mapping off-chain action. And that's where it gets really interesting. Can you say, hey, if you follow us on Twitter, you get to participate in this. And now everyone's incentivized to follow you on Twitter in order to participate in this contest to win thousands of dollars, right? This creates a kind of technical problem, which is like, how do you connect the off-chain action to an on-chain address? And I think this is kind of the big bridge that a lot of people are struggling with right now. And so I'll step back for 1 second and just make a meta point here, which is imagine you're an advertiser 10 years from now and you're trying to get, best data on users on who to target. If you imagine a world in the future where 50% of data is on-chain and 50% of it is off-chain, the on-chain data is going to be way better for advertisers to use, because now you have one person's account and you can see across all of their different services, their Web3 Spotifys, their Web3 Twitters, like how, what they've done. And so like, even if you think about leveraging a contest with us, it's like, oh, you notice two people tend to vote on the same things in a lot of contests. Well, now they probably have shared alignment, and shared interests. So you go into one of their wallets, you see that they have a bunch of like a given NFT collection. You can extrapolate, well, that's probably true to this other user. They're probably into it too. So on-chain, by virtue of being this like transparent data layer, is just like this, in its current form. And I do think will provide protections. We'll give users a way to like actually monetize this themselves using zero knowledge stuff down the line. But like, is this an incredible way to be able to like analyze users, understand them, track them, cater to them, right? And create like a customized internet that is really built for individual user preferences. And so okay, so that's my like tangent or stepping back. So let me step back in and say, there's a desperate need for this to happen, because right now, all advertisers, et cetera, are still going off Web2 data because that's the majority of data is, but it's not openly shared. It's not accessible. It's not interoperable in a way that they could be leveraged, right? And so this question of like, how do you bridge web, off-chain to on-chain, I think is like, it's a huge question for the ecosystem, because once you can do that, everything's going to shift. Like at the point that people start to do more stuff on chain, they're going to be able to get a lot more access rewards, etc. And so there are ways that you could do this with stuff like Guild, for example. If you want to join a guild, you attest that you've completed XYZ action like on Twitter or GitHub. It connects to their API, affirms that you've done that. You connect through your wallet. And now you have a full list of on-chain addresses mapped to an off-chain action. There's also services that do this like probabilistically, saying we think this Twitter account corresponds to this, NFT holder based on their address or, their PFP. These are all like really interesting mechanisms that can be leveraged so that you can start to create contests. This is my huge tangent. To create like contests that are actually based on like off-chain actions and incentivizing off-chain actions in order to participate in these.
If we talk about Web3 as the way that we can put power back in the hands of the users, right? Everybody,
that needs to be the goal.
Probably thread. Everybody's upset with the Web2 tech giants, and rightfully so. We've been made the product, right? Yeah. Okay, Web3 is going to solve that. And it's like, okay, but are we going to stop using Twitter? No, right? Are we going to stop using Instagram, Facebook, TikTok? No. Like, we're all using it. So is there a way that we can continue to use those things, but then move everybody in this direction of, okay, here's a way that you can engage. Sure, you follow us on Twitter, but now because you follow us on Twitter, we're going to allow you to also vote on product features like the example you gave before.
And that's the thing, is like, if you remember, blockchain is just an open API, right? Yeah. It's just effectively an open data for people to be able to collate. Like once you're doing these like on-chain contests over time and you're building reputation, showing you're contributing, that you're earning votes, etc. And then, I don't know, some new DeFi protocol comes along, is able to get all that data and reward you for it by saying, hey, you were meaningful. Like you've won these hackathons on Jokerace, right? You won these grants proposals. You have like contributed great ideas. We're going to airdrop your token, right? Or we're going to give you this opportunity. Like at that point, when that starts to happen, I think everyone's going to have this oh shit moment where they're going to say, wait, maybe we shouldn't be doing stuff on these Web2 siloed platforms because we're not getting anything for it. Like, whereas when we do it on these Web3 platforms, there's so much that we're going to get where like, what I'm really excited for is like the people who like play in our hackathons, lose, make no money, are pissed as fuck, right? That they didn't get anything. But meanwhile, they're accruing this like massive on-chain reputation, and then down the line, it's going to get them so much, right? Like that's what I really want to see happen, where people realize it's way better. But you're totally right. Like in the meantime, we are going to keep, following the network effects of these Web2 giants. We're going to participate in that. And the more that we can do to leverage that and bridge that and attest to that data on chain, I think the better.
I'm really struggling with your language of on-chain voting. I'm just like, of on-chain contests. I say on-chain voting. On-chain contests. It really feels like on-chain voting is what you've created with Jokerace. But you guys, you really use on-chain contests as the language. Is it only because what you said before of like, you're trying to make it fun, and that's why you didn't go with on-chain voting as like the branding term?
Well, I think there's two things here. So on-chain voting existed before us, right? Governor Bravo contracts, which we built off of, Compound has worked on this for years. But to go to my point before, the unlock for the contest is not the voting, it's the submissions. It's the fact that you submit your project in a hackathon and then a jury votes on it, right? Is meaningful. And so it's, the contest is two pieces. It's a submission period and it's a voting period. And I would say both of those are essential. So yeah, on-chain voting is huge, but on-chain submissions, I think, is just as big and just as important.
Right. And without the on-chain submissions, then you miss out on the opportunity for your community to be involved. And what you're saying with Jokerace is you don't need to have tokens in the hands of these community members in order for them to make a submission or for them to then vote on those submissions. We can do that without them having tokens, and we can do it in a way that ensures that the right people are voting because it's based upon actions that they've taken either on-chain or off-chain.
Or do it with token. It's totally up to you. But I think the point is not to say, oh no, there's no use case for tokens. It's to say the use case for tokens is a very, very small subset of all the things you could do on-chain. Like building, token voting is like, that's fine, but that's, 5 years from now, that's going to be 1% of use cases. Like there's just so many other ways that you can build that are going to create better incentives for your users and community.
And so I'm going to read out a portion of your V3 launch blog on Mirror where you talked about this. You talked about incentives and the future of customer acquisition and retention. And you gave 6 examples of how people can use contests. So you talked about incentivize people to use your product and engage in your community. Get fuller data on your users and their preferences. Get people to perform quests. Get people to hold your token and contribute it meaningfully. get people to publicly market your brand, and then finally to get people to unlock reputational incentives and plan future airdrops.
Yeah, so this is where you realize that I am just like a pull string doll that says the same thing on repeat, because it's the exact same 6 things that I talked about with the Li-Fi example, right?
But it's true that what this achieves is a new model for incentivizing your users, which the amazing thing to me is we don't even need to incentivize. If you have a strong community, you don't need incentive. The users want to engage.
But isn't that an incentive? Like if they want to engage, there's some incentive there. It's their love of the product.
It's their love,
collaborating with each other. There is some incentive there, right? Yeah.
But what I'm saying is the issue that we have right now is we don't have the simple mechanic to engage, right? And what I love is I've heard you talk about Jokerace next to POAP, which is a sort of an ambitious comparison just because POAP has achieved such mass effective. It's such a simple way to bring your consumers on chain. We talk on Web3 Academy all the time about, okay, one of the easiest ways to bring your users on chain is just to give them a POAP, right? It's so simple. It's so easy. Now, what I love about Jokerace is if POAP is the easiest way to get a on-chain activity into the hands of your customer, Jokerace is the easiest way to get your users, your customer, your community to now engage with your community.
Beautiful.
Whether it be voting or in whatever, in the form of contests, in a contest way.
That's a beautiful way to put it. And I think like using POAPs as a basis for submissions of voting is also a great idea. Like, being able to say like, the people who got the POAP, like they're the ones who put in the time, they were on this call, etc. Stuff like POAP, ThriveCoin. I think like these kinds of protocols are really, really cool for being able to put power in the hands.
Yeah. I think I just really want to I want our listeners to understand that Jokerace has mass market appeal to everyone. A new product can be very confusing, and a lot of people, especially those who are not in the DAO ecosystem. Like if you're working in a DAO, you get a lot of the stuff we're talking about and you've felt these pains. Totally. If you're not working in a DAO, you're like, well, why do I need to
care about governance? Right. Yeah. Why does this matter? Yeah.
Right. And so where my head goes is, well, if you can understand that a POAP was the simplest way to bring your community on chain, I think you can understand that Jokerace is the simplest way to get engagement on chain.
It is very simple. It is literally you submit a response to a prompt or you vote on a response to a prompt, and that is it. And that's the goal. I'm talking, leagues and leagues of, pros of, all the incentives, et cetera. No, it needs to be as simple as possible. And that's been very much a goal. Even with our V3, with the new UI UX, it's like, it is pared down and it is simple. And like almost the point of being like fairly primitive, I think, in a way that we really want. It's minimal, right? I love that formulation. And so, it is this interesting thing where it's like, I meet people who are not in crypto and they're like, what are you doing? And I'm like, I'm building a platform for people to, have contests. And it's so interesting because people are like, what? Like, that's never existed before. No one's ever done that. And you think like, wait, why has there never been a platform for contests? Like, that seems like an obvious thing, right? Like, why has that not existed? And it's because you need financial rails to build on top of. Like, you literally can only do this with a blockchain, right? There are hackathon, and there are bounty programs that are out there, but you're just trusting that they're going to pay you. There is no, like verifiable code backing up that payment, right? And so it's a whole new paradigm. And the other way to look at it, though, is actually everything is a contest platform. Like, Twitter is just a contest platform. You're submitting something on there, and then you're hoping people vote on it through what they call a like, but the like is just a vote. And if you get enough votes, then you will get more visibility. And so that is the incentive that you are going after, is like, will I get more visibility by submitting something and having people vote on it? Like, Twitter is just a contest platform. Reddit is just a contest platform, right?
Well, and the worst form of contests, which are probably the most popular, are the follow us, tag 3 friends, comment here, and it's all fake. It's all fugazi. Like, there's nothing, and to boot, as you said, one of the most impactful things about participating is that I'm now creating this reputation around, okay, I care about this brand, I care about this community. And the more I do that, well, the brand would benefit from knowing that. But when it's all on Web2, you don't know. Like it's
you
all
don't get any access to that data, right? Yeah, they can put out these tweets, but they have no ability to follow the users who liked it. I think even Twitter's blocked off that API recently. So it's like, yeah, the fact that it's not under their control and it's, they can't access it, right? It's a total limitation.
You got to do a tweet titled "Everything is a Contest." I want you rant on that because I do think rant's the wrong word. I want you to because I do think that helps me understand Jokerace better because it puts it into this frame of reference of everything is a contest.
I think sometimes I think when we were pitching a bunch of VCs and, people are like, how are you going to monetize this? And we're struggling to come up with answers. We're like, I don't know, maybe this. But the thing you remember, every blockchain is a contest. Literally a block is just a bunch of transactions that people are trying to outbid each other on to get included in that block, right, of transactions. And so it's literally a contest, right? An auction, you could say. But it's a contest where people compete to win this race, to be included. And so the fact that the blockchain itself is a contest for one specific use case, you can just imagine how big I think the potential is for contests overall when anybody, can create these kind of rewards pools and these incentive models, right, for their user base to ways to actually compensate them for the work they're doing.
Yeah. Okay, before we wrap here, we literally have only gotten through a quarter of our brief for today's podcast. So we're definitely going to have to get you to come back to it.
We'll do this again.
I want to talk about the cooperative chain thesis, or as Kevin Owaki calls it, the ecosystem chains. I want to talk about storage proofs. I want to talk about ZKs. There was so many other things that we had prepped for today. But
love it all.
Before we wrap, we talk a lot about on Web3 Academy about the fact that we believe we're in the early phases of a bull run. Now, let me be specific, a crypto bull run. The way that will cycle through the rest of the ecosystem is sort of to be determined. It'll take time. And I also want to be clear that I'm saying early phases of a bull run, as in we're seeing signs, not necessarily that we're on that trajectory of a typical bull run. But you had a tweet where you talked about your case for another crypto bull cycle. And you had two thoughts. I'm going to read them and then I want you to comment. Number one was reputation incentivizing everyone to want to transact on chain rather than off to earn rewards, access, power, airdrops, etc. And number two was IBC enabling total interoperability. So any blockchain lets you operate any other blockchain.
Yeah. Okay. So one, I kind of talked about, which is the more you develop on-chain reputation, as I said, that person who participates in 18 hackathons doesn't win any of them, but has gotten votes from meaningful jury members that have accrued over time. They've still built something really powerful for themselves. They built this resume showing that they have built valuable products and that they've, consistently gotten, rewarded for it and consistently been liked, and they can leverage that for job opportunities at the very least. But also because this is all permissionless zone, anybody could airdrop them to be like, we see you're a valuable builder, right? Or we want to work with you. Or anyone who's hiring could just start crunching data to figure out who's good, right? That's the piece where it's once you see the people who are building on-chain reputation getting all that access, everyone else is going to go, oh shit, why were we doing a hackathon off-chain, right? When that no one can crunch that data and can see it and can access it, right? That would have been much, much better for me to do in this other way. I will also say one thing I think that's nice about what we've built with contests is there's no way that you ever are really a loser. No one votes against you, right? They just vote for you. And so if you happen to get 0 votes, that's nothing against you. You just didn't get votes that time that went to other people. It's not like people actually said, you're a terrible contributor and you're meaningless and we hate you. The other thing I said was about IBC. And so IBC is the Cosmos, basically a bridge. And so what it allows is for any Cosmos chain to be able to interact with any other Cosmos chain. They can share finance, with each other, but they can share other data too. One nice thing about blockchains is money is just one form of data that you can pass. You can pass all sorts of other messaging. So for example, if you make a decision on one chain and then it executes a transaction on another, that's possible, right? And so IBC is really special because it's really the only bridge that is effectively been around this long and not gotten hacked. And so it's been totally stable. No one has ever managed to hack it. And, knock on wood, right? I think it's fair to say it's probably the most your bridge protocol that's currently out there. And so there's projects like Polymer that are working on extending IBC to any chain. The larger point with what I was trying to say is that we are facing this issue where with all these L2s and all these rollups, which is awesome that they're all existing and out there, they're now increasing the amount of block space that can exist. That is making things much cheaper for everyone to participate, all of which is like a huge win for the system, right? They're also tracking their own communities, etc. The problem is, like, how do they interact with each other? And then if you launch a new chain, how does anyone interact with it when they have to pay the gas, right? And so this is just a basic question, but it's one that we're facing a lot, which is we support something like 40 EVM chains. That takes us like 2 minutes to add a new one. But whenever someone creates a new chain, they launch a contest. This is a great way for them to draw users to their chain, right? To be like, hey, we're having a contest. We're going to give away $1,000. Tell us, what communities you want to see build. Now you've created an incentive for people to start transacting on your chain, but they don't have the gas fee, right? And so like, there are ways around this, like gasless relayers and swapping protocols. But like overall, what you really want to start thinking about is like, what are ways that anyone could just be like, operating on one blockchain or running on one blockchain, and that's actually executing a transaction on another one, right? I'm paying the gas fee on this, with my one token here, and then that's actually, being passed over through IBC or related bridge to cover the, the fees in the other one. But more advanced, like how do I make one decision and then it's operating on the other? And you effectively like let each of these blockchains almost be like a computer that's operating a node in a way, and they're all operating each other in this way. So they can share users, they can share liquidity, and you don't have this problem that like to use a new chain costs you a ton of effort, right? Mm-hmm. And time and labor, and then they're not interoperable with each other at all either.
It makes me think about Chainlink's cross-chain interoperability protocol, which they launched recently at ECC. But we're in such an interesting time of Web3 where we got to get so nerdy right now on all of this under the hood stuff, all of this stuff that's all at the layer that most people, when they come into Web3, should never have to think about this. They should never be like, oh, I'm on this chain and I want to go to this chain. Oh, I need these tokens and I need to bridge. No, if you have to do that, we're never achieving that.
Yeah, you probably shouldn't even think about what chain you're on, right? It shouldn't really be a question. The same way it's like you're not thinking about what internet you're on. This is my dial-up provider. In order to connect with you on this provider, I need to connect, or what email service provider you're using. We all can just email each other. We can all just connect. Completely.
All right, last question. I know you got to jump to another call. If you had a billboard that 1 billion people were going to see, what would you write on it?
I'm going to probably have to think about that one. I would probably just write jokes all the way down, I think is what I would put. And I would
jokes all the way down?
Jokes all the way down. When you dig deep enough, it's all a joke. We've gotten this interesting criticism where people are like, you're centralized because you're letting people create an allow list. Like that account now determines whoever's in the community. And you're like, but what's the alternative? Like someone has to make that decision of who's in the community for that given contest. And look, if someone makes a decision and everyone in the community is like, screw that, then they won't participate. They'll form their own. They'll fork it. Mm-hmm. The beauty of blockchains is that they're built on social consensus. They're built on people coming together to validate and say, we think this thing is true. We think this money is worth something. We think this transaction is valid because we all have agreed on it. That's why decentralization is really important. And I think like what we have done is decentralized. You can have a multi-sig of 100 people create the contest if you want to, or you can have an individual. It's up to you. It's permissionless. But like ultimately, this is as decentralized as it gets because we are turning it totally over the blockchain to verify, and we are, letting anybody create a contest, right? And however they want, and then letting any community decide if they want to participate in it and if they find it legitimate or not, and how they want to crunch that data as well, right? Like that for me is decentralization. But decentralization is not necessarily credible neutrality. It's a little bit different because it is people all deciding what they think is true and what they think is legitimate. And so, when I say jokes all the way down, what I mean is like, there is no serious, correct truth that you can rely on. There is just social consensus all the way down. All a joke.
I love it. David, this has been just a blast. Thanks for your time. Thanks for everything you're building. Everybody out there, if you have not checked out Jokerace, go check it out. Link is in the show notes. And set up a contest for your community. Go experiment. Even if you have a community of 5 people or you have a community of 1 million people, you can use this tool to bring your audience on chain and to get them to participate in a meaningful way. And you're going to help them build their on-chain reputation. It's just win, win, win. I'm going to go win, win, win all the way down.
I appreciate that. Yeah. And if you throw some rewards on, DM us on Twitter and we'll try to feature it too on the site so we can help promote it too.
Amazing. David, thanks so much for the time. Thanks for everybody for listening in. Have an awesome day.
My pleasure. Thank you.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.